Welcome back to my channel. Today we are diving into a topic that almost every homeowner is affected by. Okay, so if you've bought your home and you're in your home 1 year, 2 years, then you will most likely have to go through this. All right, so the topic for today is what happens when your property taxes go up. Most homeowners don't actually realize how big an impact of taxes it is to them when it increases on their home values. Okay, so today we're actually going to be diving or explaining why your property taxes increase, how it affects your mortgage payment, how your escrow gets a shortage when the taxes increase, how lenders adjust your monthly payments, what you can do if you can't afford an increase in these taxes, how to appeal for your property taxes if they are high, and how this actually will affect your home value and your insurance. By the end of this video, you should be able to understand exactly what is happening behind the scene and how to protect yourself financially. So let's get started. So the first thing we're actually going to be talking about is why your property taxes will actually go up, right? Most of the time we get these property taxes, or at the end of the year you will see on if they mail your statements to you, or even if they don't, right, they will let you know, or your consolidated, or your, I think it's called the 1098 something, they notify you that you have it. If you don't actually have your papers mailed, your statements mailed to you, they'll tell you that it's ready, so you can actually go to maybe your mortgage website and look at it, and there you will see these taxes, how much they paid and all that. Okay, so now let's answer why property taxes actually go up. There are 5 major reasons why your property taxes actually go up. Okay, so there are a couple of things. It's not just one thing, couple of things that make your property go up. So the first thing is your home value actually increases. And when we talk about your home value increases, cities and counties will always reassess your home value, and it depends where you live. It's going to be either 1 or 3 years, and some states actually do it in 10 years. So lucky you if your state only reassess your properties in 10 years, but there are counties that will do it 1, 2 years, 3 years as you own these houses. So keep in mind that the first thing that will cost you to have your property taxes go up is your home value is increasing. Okay, and it doesn't matter if you renovated your house or not, they still increase with time because homes appreciate. The second thing is local tax rates increases. So sometimes the mill rate or your tax rates, right, goes up because the city needs money for things like schools, roads, fire and police departments. So if they need money higher for the next year, they are definitely going to be increasing your taxes. Okay, so if they have more roads to build next year than they had this year, of course they need that money, so definitely you are going to see an increase. Other things like parks and infrastructures might equally be amongst these the things that they want to do, so they end up increasing your taxes. All right, so the third thing is you lose a tax exemption. So there are some people that actually get tax exemptions, and some of these tax exemptions are home state exemptions, senior exemptions, disability exemptions, military exemptions. So if you had one of these exemptions and suddenly lose it, okay, that means whatever tax credit you were getting from that, you're no longer gonna have it. So definitely that money is going to go back to your taxes, and then you will need to pay it off. So that is why you might have your taxes increase on your home. So, or if you forget to reapply, okay, that sometimes we get busy with life and then we forget to reapply for these things. So we're definitely going to have our taxes increase if we forget to reapply, or if we, something happens and then we lose it. All right, the fourth thing is improvements were added into your property. Most of the time when it comes to reassess your house, they actually ask, did you do any new improvements on your home? And if you did and you tell them yes, of course they're going to add it to, okay, this is how this house was looking a year or two ago, and now this house is looking like this. So of course, if you made any improvements and they really see that, okay, this is going to add to your property value, why not? Your taxes are actually going to go up. So the more improvements you make, more likely your taxes are going to go up. And the fifth one is reassessment cycles. So some areas, like I just said, reassess every year, others reassess every few years. So during the reassessments, your value actually may jump up significantly. Let's take an example. If some counties that reassess every year, you're not going to see a jump like that, okay? Because you're going to see a slow increase in your taxes as years progress. So let's take for people that only reassess their taxes for 3 years. If I reassess my tax this year and I wait for 3 years, there might be a jump, because of course those other 3 years that the properties were not reassessed, you really didn't see an increase. So when now they do that reassessment, and it's 3 years, right? So it's 3 years worth of appreciation. Maybe you did more improvement, and at that time they have more things they want to work on, more schools they want to renovate, more roads they want to fix. You might really see that jump. So those are some of the reasons why our property taxes go up. Let's get to the second point of this video, which is how higher property taxes affect your mortgage payment. So like I just said, how higher property taxes affect your mortgage payment. Now let's break it down. Why will we think that a higher property tax is going to affect us? Of course it will. We are actually definitely going to see this increase in our payments, okay? So your mortgage payments is divided into 4 parts, which is going to be your principal, your interest, your taxes, and your insurance. All right, so now that we're talking about taxes, let's focus on only the taxes. When your property taxes, your T, which is your taxes, will definitely change. Even if your principal is the same, your loan is fixed, right? Most of us have fixed loans, okay? We don't have to struggle and it's like, oh, the loans is going up or down. Most of us have it. Your interest rate is actually equally fixed. Your principal will never change, right? So despite most of these things getting or being fixed, it doesn't still stop our payments from going up, because if our taxes go up, our payments are definitely going to go up. So our monthly payments are going to increase if there is an increase or a jump in our taxes. That means lenders will actually be required to collect more money, and that is why we will see more money on our monthly payments. They will be required to collect more money so that they can pay for this increase in taxes. So that means there's going to be a rise in our escrow, okay? You see it on your monthly payment, but where you're actually going to read this thing is going to be in your escrow, because that is where your taxes are kept. The third point for the video is going to be what is an escrow account, or what an escrow account actually does. Your escrow account is like a saving account to your lender. They collect money to pay for stuff like your property taxes, your home insurance, and sometimes your mortgage insurance, depending on what kind of loan you have, right? You hear stuff like private mortgage insurance or mortgage insurance like your PMI, or if you have an FHA, you're going to have a different kind of insurance, but you still have to pay for this. So that's why your escrow actually exists, or what it actually does for you. So all these monies that are collected is actually kept in your escrow. So when taxes go up, your escrow money equally needs to go up, right? It needs to level up as well. So if your taxes go up, don't expect your escrow to remain the same, because of course, if I'm going to be paying higher next year, I as a lender, I'm supposed to be taking more money from you, so that there's going to be no shortage in that escrow account. And that brings us to the fourth point, which is what is an escrow shortage. Now, when taxes increase, okay, an escrow shortage occurs, or increase in taxes would actually cause an escrow shortage. And an escrow shortage just basically mean the lender didn't collect enough money from previous year for you to be able to pay a higher tax bill which is coming up. Okay, so let's say we're in the year 2025, we're going to be paying our taxes soon, and then later in the next year, if our taxes increase and they don't collect more money, there's going to be a shortage. So when there's an escrow shortage, your lender is supposed to collect more. So let's give a real example to see how this actually works. So imagine this year our lender is collecting, let's just, like, we're using an example, something like 3,600 for taxes, but the next year our taxes are actually going to look like something like 4,200. Okay, that means that we are going to be short next year $600, right? And our monthly payment are definitely going to be increased whether we like it or not, so that they don't have to go through the same shortage. So lenders will give us options like this. The first option they'll give us is, if you have the money in full, which in this case is going to be 600, pay it out. All right, so if we have the money to pay the shortage off from, voila, our monthly payment is not going to increase from just that shortage. Remember, regardless of the shortage, you're still going to have an increase in your monthly payment. Okay, so this shortage is just what you owe for this year's taxes that you do not put enough money into. Then the second option is going to be something like, let the lender spread the shortage spread it out for 12 months. So if you say I don't have the 600, and let's just spread it out within 12 months. So we're going to do 600 divided by the 12 months, which is equally going to give us $50. So whatever your monthly payment is going to be plus that $50 that you were unable to pay from the first option, right? So that means your taxes are going to go, your monthly payment are going to go up $50 extra. Remember, we haven't even started talking about the new increase in taxes for the next year. All right, so this is just the shortage that has occurred this year, and that is the 4,000 minus the 3,600 that you only made. You only made 3,600, but your taxes came up 4,200. You understand what we're saying? Yeah, so that's actually how it's going to work. Now, the fifth point is how lenders adjust these new payments. So every year lenders do an escrow analysis, okay, and in this analysis they will decide how much was collected last year, how much taxes were actually paid, whether you were short or you had a surplus. There could still be a surplus for some people, all right? So it's not only about the shortage, but for the purpose of this video, we are talking about a shortage and how much to collect for the next 12 months so that they do not equally go into a shortage. And then if the taxes increase, then your new monthly payments are equally going to be recalculated to make sure that those taxes are covered, so we don't have to go through the same thing we are just going to be going through from the example. Okay, so your new tax bill is going to be that tax bill divided by 12 months, and any shortage are going to be spread over. If you took the option of I don't have the money and I'm going to be paying it off as the months go by. And keep in mind that your home insurance might equally change. Okay, most of the time home insurance changes as years pass by, because most of the time they say there is inflation, so things are definitely going to be more expensive as the days pass by. So as the days pass by, most insurance companies increase your home insurance premiums as well. So added to any mortgage insurance that you're going to be having on that home, then imagine if you have all that and you have a fixed mortgage, then your payment can go up every year. It just depends. It's not every person. If your taxes don't go up, your payments are not going to automatically go up. If your insurance doesn't go up, it's not going to go up. But like I said, in the case of this video, we are talking about when your taxes actually go up. So let me give you guys an example of how your escrow is adjusted. Let's say your lender does an escrow analysis and finds out that your old property taxes was 3,600, okay, and then your new one is going to be the 4,200, all right, and then your escrow shortage is 600. They will have to calculate the 600 first, okay. So your new tax is already 4,200, so that 4,200 they're going to divide it by 12, all right, and in 12 months that means you're actually going to be having 350 per month on your new tax portion. So that's what is actually supposed to be going to your escrow. In that money is going to be added to your normal monthly payments which you're supposed to be making. Now we've known how much you're going to be paying in taxes next year, which is an estimated amount, okay, 4,200. Let's talk about the shortage that you just got. So the shortage is 600, so they're equally going to divide that 600 by 12 months if you want them to spread it out only for 12 months. I mean, you can always have conversations with your lender. So let's assume that they agreed to spread it out for 12 months. So 12 months, 600 divided by 12 months is going to give us 50, right? Okay, so that 350 plus the $50 that you are actually owing or is coming from the shortage is going to be added into your payments. So now when you start paying for the upcoming taxes, you're going to see something like 400 goes towards your taxes instead of 350, just because that shortage was added onto your monthly payments, okay. So like I said, if you have the 600 and you don't want to spread out and you choose to pay up the 600, you're not going to see this increase of $50. But if you can't afford it and you want them spread it out in that way, then you're definitely going to see the additional $50 in your payments, all right. So that is basically how you're going to actually see it. So just bear that in mind and be ready. The sixth point is, what can you do if you can afford an increase? So many homeowners feel, oh well, I can't really afford this, what can I do? There are so many things you can actually do. The first thing is pay in full. Like I said, that's the first option. Pay in full if you have the money. If you don't have the money, then you have to figure out another option that you most likely have, because when you pay in full, that shortage is going to be a reduction of $50 a month from your normal monthly payment. You can actually ask the lender to spread it out in 12 months like we just did in that example. If they spread it out in 12 months, for some people that's going to be way easier than pay the upfront 600 or whatever is going to be their shortage amount. Remember, 600 is just an example. Everybody's shortage amount is going to be different, okay. The third thing is for you to adjust your escrow, okay. So you can ask the lenders to allow a required small escrow cushion, usually for up to 2 months of payment, but they cannot charge you more. So you can do an escrow cushion. Number 4, you can petition to your county for the payment plan, okay. So you can go back to your county that issued you these taxes and petition and say, hey, well, can we just do something else instead of me paying it to my lenders? Can we do quarterly payment or semi-annual payment, or maybe just do a monthly tax payment, okay? This way it can ease my burden. You can go back to the county and see if they have these options and they can allow you work with them instead. The third thing is the fifth thing, is you can actually appeal for property assessment. So if you think that the taxes given to you are way higher than what you would have, or you think it's not correct, it's wrong, you can actually appeal, all right. And I'll be explaining more on how to appeal as the video goes by. So the number 6 thing is make sure that you claim every exemption that you qualify for. So if you were having some exemptions and you forgot to reapply, please remember to reapply so that your taxes might go down, all right. The seventh point for this video is how to appeal if you have higher property taxes. So you can go back and appeal and let them have a new tax assessment on your home, and this is how you can go about that. Okay, so the first most important thing is, if you think your taxes have risen, the first thing you need to do is request for a property tax assessment. And how do you go about that? Remember that you have the legal right to actually apply for or ask for a new assessment on your home, so you are way within your rights to do that. And make sure that whatever your home value is, you have to first of all check to make sure that what they have is wrong. Okay, so have the city value your home, compare the homes they've used, and they should show you what they compared, what home they used in comparing your home as well, and what improvements they included in your property tax assessment, because sometimes they could be wrong. Okay, step 2, look for inaccurate information in that property assessment they just gave you. Remember, you're going to be asking them to show you how the city valued your home, what homes they used in comparing yours, and what improvements they included. Okay, so when they give you that, make sure that stuff like your square footage wasn't put wrongly, your number of bedrooms weren't actually put wrongly, your tax or your improvements were not equally put wrongly, you didn't have the wrong lot size, you didn't have the wrong neighborhood comparison. Okay, so pay attention to these things. Those are common errors that you can see on that tax assessment. So make sure that everything on that your assessment is what actually belongs to your house, especially when it comes to the lot size, your footage, the improvements, if you did or you didn't. So pay attention to that. And the third thing you have to actually do is you have to go out and gather evidence. You can't just go and tell them to appeal and then you have nothing to show for. Okay, so you have to go out and gather evidence. What are the things you need for this? You need to make sure that the real estate comparison is correct, the appraiser, so appraise your home if you are able. Make sure you have photos of that house that you're going to go and appeal for. Make sure you have an estimate of what you think your home is worth. Don't just go out there blindly. So make sure you have an estimate of the house before you go for appeal. And you can actually go through an MLS listing. These are websites where most real estate agents use. Okay, so you can look for a real estate agent and tell them to see how much your home value is worth. All right, and sometimes there are some lenders that actually have a comparison of your house from your neighborhood, how much the lower payment and the higher payment comparison, what your house could actually be costing you, or what you can actually sell your house for. You can actually just look at that too, just to make sure that you are on the same page. All right, there's no harm in checking. Maybe your lenders could have some information like that for you. So those are the things you have to gather as evidence as you go out to appeal. Now, fourth thing is for you to be able to submit a formal appeal form. Okay, so the counties allow you to submit these appeals online, or some maybe you have to go in person. It just depends. But if you have the opportunity to submit it online, that would be very good. Provide evidence that you just gathered, and you will have to attend a hearing when they grant you a hearing. And then fifth step is you get a tax reduction. So if your hearing was approved and they felt like they gave you high property taxes, then they might approve your appeal, right? And if they do, that means your home value is going to decrease. And if you have a lower home value, most likely your taxes are going to equally decrease. Okay, so your escrow payment is definitely going to decrease, and your monthly payment equally will reduce significantly. So those are the steps in which you can actually go out there to appeal if you think that your home value was given incorrectly and then it increase your taxes, and you're like, no, this is really not what I think I should be getting from taxes. All right. And number 8 for this video is how higher taxes affect your home value. If you think it's only about paying higher premiums, then you have to rethink about it. Okay, property taxes will influence the prices on your home than you actually think. The things you're going to see is higher taxes may lower buyers' demand. So if there are higher taxes on your home, you may lower the buyer's demand. Remember that when you actually list your house, okay, to sell, most taxes are prorated, meaning that if I come to buy a new home, let's just say in the month of June, that means you must have paid for the taxes for that house, okay? And then if I come to buy that house and I see that the taxes were way so high, that means I will have to actually pay for the remaining months that I'm going to be owning the house. That means that's more money adding into the money that I'm already thinking of using to buy a home. Okay, so that may lower the buyer's demand. The second thing is reduce what the buyers can actually afford, and the third one is you can slow down the market for you as a seller. Okay, but there can also be an increase in home value if tax funds are to better your schools around your area. You know, good schools equals to children are able to attend these amazing schools. Okay, better infrastructures, might be more parks, better roads for you, you know, and a safety or a safer neighborhood. Okay, so it just depends on the area, but one way or the other, if there are higher taxes, this could be because of these reasons, and at least it's equally going to benefit you. It's just that it might equally benefit you in a negative way. All right. And how do you think your home taxes or higher taxes are going to be affecting your insurance? Logically speaking, your insurance premiums and your taxes are really not directly connected, but when one goes up, your lenders definitely will have to go back and try to analyze your whole escrow. Okay, so in reviewing that escrow, they might see that, okay, your monthly payments might increase for both your taxes and your home, because I mean, if your taxes are increasing, might be your home value is increasing, so the worth of it of course is increasing as well. Then the home insurance people are going to be like, oh, if something goes bad in your house, that means we will need more money to fix it. And that's how your insurance premiums actually go up. Okay, because they'll be like, oh, this year the prices are so high, so I think we're going to be needing more money to give you a better upgrade whenever something happens to your home. And that's how you end up with high insurance taxes. Okay, but like I said, your taxes really don't have anything directly in connection to your home insurance, but most likely you're going to equally see an increase in your home insurance as your taxes go up. Okay, and let's do a little takeaway of this whole video. What's going to be our takeaway for this video is, if you notice that your monthly payment increases, don't just be like, oh, what's happening. Make sure you check for things like your taxes, your home insurance, to see what's really causing your mortgage premiums to go up. Okay, and for you to be able to understand how reassessment work, how many years is actually they used to do a reassessment. For some people, they reassess houses, their properties every year, some people 2, 3. It just depends on where you're living. Okay, so make sure you know how many years it takes for a tax assessor to come and assess your homes. Equally, then to you make sure that you know how lenders are actually calculating those payments and how they're adding those payments into your monthly premiums. And if you have the option of paying off any shortage, please, and if you have the money as well, please make sure you pay them off so that your monthly, those shortages are not going to be spread across maybe the whole year, and then it's going to end up into your monthly premium. Okay, and please, if you forgot anything in this video, remember if your taxes are high, remember the steps I just talked about on how to appeal your home property taxes if they are higher. Okay, that can save you hundreds and sometimes thousands of dollars per year. And if you found this video helpful, please like my videos, share, subscribe, and leave a comment. As always, thank you for watching to the end. Stay safe and healthy.